Hello everyone, and welcome back to our channel. Today, we're diving deep into the currency markets, specifically the fascinating tug-of-war between the US dollar and the Japanese yen. The USD-JPY pair has been on a downward slide for over a week, and it looks like that trend might just continue. So, what's driving this? Let's break it down. The big story here is the growing gap between what the central banks in Japan and the US are expected to do. Over in Japan, the Bank of Japan, or BOJ, is sounding increasingly hawkish. After years and years of ultra-loose monetary policy, the market is now betting that they are gearing up to tighten things up. This could mean ending negative interest rates or making other moves that would strengthen the yen. The prospect of higher returns in Japan is making the yen a much more attractive currency for investors. Now, let's flip over to the United States. The sentiment around the US dollar is completely different. The market is buzzing with speculation about interest rate cuts from the Federal Reserve. Just this past Monday, the US dollar hit a 2-month low because investors are increasingly convinced that the Fed will start cutting rates sooner rather than later. Lower interest rates generally make a currency less appealing, so this is putting significant downward pressure on the dollar. When you have one central bank looking to tighten and another looking to loosen, it creates a powerful dynamic in the currency markets. This divergence in policy expectations is the main reason why the path of least resistance for the Japanese yen seems to be upwards. Traders are seeing this clear signal and are positioning themselves accordingly, which reinforces the downtrend we're seeing in the USD-JPY pair. So, a stronger yen and a weaker dollar seems to be the prevailing theme for now. However, it's not all smooth sailing for the yen. There's a potential roadblock we need to keep an eye on, and it comes from within Japan's own government. Prime Minister Sanae Takaichi has proposed a massive spending plan. While this could stimulate the economy, it also raises serious concerns about Japan's fiscal health. A huge increase in government spending could lead to a deteriorating fiscal condition, and that could put a cap on how much the yen can really appreciate. It's a classic case of monetary policy and fiscal policy potentially pulling in opposite directions. Investors will be watching closely to see how this plays out, as a worsening fiscal outlook could scare off some of the bulls who are betting on a stronger yen. So, to sum it all up, we have a hawkish Bank of Japan and a dovish Federal Reserve, creating a strong tailwind for the Japanese yen against the US dollar. This is why we're seeing the USD-JPY pair trend lower. But we also have a potential headwind in the form of Japan's ambitious spending plans, which could limit the yen's gains. It's a complex situation with a lot of moving parts, making the USD-JPY one of the most interesting pairs to watch right now. What do you think will happen next? Will the BOJ's hawkish stance win out, or will fiscal concerns hold the yen back? Let me know your thoughts in the comments below. Thanks for watching, and if you found this breakdown helpful, don't forget to like, subscribe, and hit that notification bell for more market analysis. See you in the next video.